This investor made 27% compound interest over 5 years through this simple real estate investing strategy. This is an example of a successful real estate investment made here in Ontario, specifically in the city of St. Catharines in the Niagara region. Let's get into it. If you're new to my channel, my name is Koukun Unosawa and I'm a mortgage broker, and I've been investing in real estate for over 10 years. Check out some of the free resources in the description below, and if you're interested in a quick 15-minute call to discuss your situation, the link to my calendar is in the comments as well. Alright, let's get started. So this investor purchased this townhouse here in St. Catharines back in March of 2018. He paid $145,000 to purchase his home, and it's a 2-bedroom, 1-bath property, and it's a condominium townhouse. Now, to buy this property, he put a 20% down payment, roughly $30,000, and he spent about $35,000 to renovate the property, and we'll go through some of the renovations he did shortly. Initially, he rented out the property for $1,450 a month, and more recently it was rented as high as $1,850 a month plus all utilities. From day one, he was cash flowing at least $500 a month, and that amount did increase over the years. So as you can see behind me here, one of the main renovations he did to this property was to update the kitchen and actually open up this kitchen as well. It was a fully enclosed kitchen previously. You can see in some of the before photos, it was quite the dated kitchen. So he actually got it custom made and he put quite a bit of money into it. I personally like it. It really leveled up the quality of this unit, and it really helped him rent out the property to good tenants over the years because it really stood out. People don't really have a kitchen of this quality in most rental properties. He also put in the stainless steel appliances. He put in a dishwasher. And another big renovation cost, but also something that I like, was that he replaced all of the flooring throughout the property. And when possible, he did vinyl plank flooring as well, which is a more durable type of flooring. All right, let's go check out the basement. Now let's get into the sale of this property. In March of 2024, the tenants of this property moved out, and this investor listed this property for sale for $379,000. On the first weekend, he got 3 multiple offers and ended up selling the property for $390,000. Now, after accounting for realtor commissions, legal fees, and sort of the closing costs, he's still walking away with roughly $370,000. And behind me here, you can see another one of the renovations that he did to this property was to finish this basement. In a 2-bedroom, 1-bath property, it was very valuable to add some additional living space to this property so that it can be used as a 3rd bedroom or a home office. So again, this helped him get a good sale price, and it also helped him get good tenants over the years because there was a lot more square footage that was usable for the tenants and the future owner. We're now in the 2nd floor of this property, and we're in the master bedroom. One of the nice things about this property, if you can see behind me here, is that the master has a walk-in closet. And even though it's only a 2-bedroom property, both of the rooms are quite spacious, which was something that this investor really liked when he initially purchased this property. So let's get into some of the return on investment numbers for this property. This investor invested $30,000 for the down payment, $35,000 for renovations, so all in about $65,000. And he started off with about $116,000 mortgage on this property. Now, over the past 5 years, that mortgage has been paid down by roughly $12,000. So that's about an 18% return on his investment over this 5-year period. Next, while the property did have a positive cash flow of $500 to start with, and it increased over the years, he also did have some vacancies, some maintenance and repairs. He replaced the furnace and AC. So there were some costs ongoing that he had to put into this property. So for the purposes of this calculation, we're gonna assume that the property broke even though there was some positive net profit. Now, finally, the appreciation of this property. So he's gonna walk away with $370,000 from this sale. His cost of purchasing the property, $145,000, plus his $35,000 renovation budget, brings his cost of purchasing to $180,000. That gives him a spread of $190,000 of profit from this sale. Now, whenever there's a profit, there's also capital gains taxes involved. So if he were to pay at the highest capital gains rate of roughly 25-26%, he would be paying approximately $50,000 of that $190,000 in capital gains taxes, leaving him a net profit on the appreciation side of about $140,000. So let's tally up his total profit from this property. He's making $140,000 from appreciation after taxes, after fees. He's making $12,000 from mortgage paydown, so $152,000 of profit in total, and that represents a 233% return on his $65,000 investment. When you plug those numbers into a compound interest calculator, that brings the annual interest rate of this investment to 27% a year. If any of you know, Warren Buffett, one of the greatest investors of all time, is the greatest investor because he had a 20% annual compound return over a period of 60 years. While 5 years is not quite that long, it is still a very good return on investment for a 5-year period of time. Do you think this was a good real estate investment? Let me know in the comments below. And if you're interested in investing in real estate or just have a question about mortgages in general, feel free to book a quick 15-minute call using the link in the description below. Until next time, all the best.